Hi there and welcome. We're really glad you're here for this chat, which has been put together for you by the brilliant team at My Tax Accountant. We're going to get into something that honestly touches almost every family at some point. What happens with tax when you lend money to the people you love?
You know how it is. Your son or daughter needs a hand with a house deposit. Maybe your brother has a great idea for a new business. Of course you want to help, but, and it's a big but, that generous gesture could actually turn into a massive tax headache. So the big question is, how do you do the right thing by your family and stay on the right side of the tax man?
All right, so where's the catch? Well, it all comes down to one single crucial question. And getting the answer wrong, that can cost you a lot. So, is it a loan or is it a gift? It sounds simple, right? A loan is money you expect to get back. A gift is, well, it's a gift. You don't. But here's the kicker. It doesn't really matter what you call it. It's all about what HMRC calls it. And trust me, their label changes the whole game.
And if HMRC decides your loan was really a gift, well, this is the number that should make you sit up. 40%. That's not a typo. That's the potential inheritance tax that could be slapped on that money if you die within a few years. Just think about that. A huge chunk of the money you wanted your family to have could just vanish. Here's the thing you absolutely have to remember. HMRC does not like informal arrangements. A handshake and a promise just won't cut it. If you don't have clear proof in writing that it's a loan, they'll just make up their own mind. And spoiler alert, their assumption is usually the most expensive one for you.
Okay, let's dive a bit deeper then. Let's unpack the actual tax rules and see exactly how easy it is to fall into one of these traps. And it's not just about that big 40% number. There are other little tripwires too.
To really see how this plays out, let's talk about someone we'll call Uncle Barry. Picture this. He lends his nephew £80,000 to get on the property ladder. An amazing gesture. He doesn't charge interest, and they don't bother with any paperwork. I mean, it's family, right? Well, when Barry sadly passed away a couple of years later, HMRC took a look. No paperwork, no proof of repayment. They just said, no, that was a gift. And boom, £32,000 in tax for his estate, all for the lack of a simple document.
And here's another sneaky one to watch out for. It's called gifts with reservation of benefit. Sounds complicated, but the idea is simple. Let's say you give your daughter a chunk of cash to buy a house, but then you end up living there without paying any rent. You're still benefiting from the money you gave away. So as far as HMRC is concerned, you never really gave it away at all. And that money, it's counted as part of your estate when it comes to tax.
But, if it is treated as a gift, time can actually be on your side. This is where the famous 7-year rule kicks in. If you die in the first 3 years after giving the gift, it's taxed at that full, scary 40%. But after that, the rate starts to drop or taper every year. You can see it here. It goes down and down until, after 7 full years have passed, the tax disappears completely. So timing really is everything.
So you might be thinking, okay, I get it. I'll just charge a bit of interest. That'll make it look like a real loan. And yeah, that's a pretty smart move. It definitely helps your case. But, and there's always a but, any interest you get paid is income, your income, and you have to declare it. So you've got this trade-off, right? An interest-free loan is simpler on the income tax front, but it's much riskier in HMRC's eyes.
And if you do decide to charge interest, you need to know about your personal savings allowance. For the current tax year, if you're a basic rate taxpayer, you can earn up to £1,000 in interest from all your savings, and that includes the interest from this family loan, without paying a penny in tax. But look, that allowance gets smaller if you're a higher rate taxpayer, down to £500. And for additional rate taxpayers, it's zero. Anything over your allowance, you're going to have to pay tax on.
All right, enough with the doom and gloom. We've laid out all the traps, but the good news is, the solution is surprisingly simple. It really all comes down to one thing: paperwork. This is your shield. It's how you protect yourself, your money, and most importantly, your family.
Look, putting together a loan agreement isn't about saying, I don't trust you. It's about making things crystal clear for everybody involved, and that includes HMRC. It just needs the basics: names and addresses, the date, the amount. You need a repayment schedule, and you have to state the interest rate, even if it's 0%. It's also a good idea to say what happens if someone can't pay. Then you both sign it. Done. This one piece of paper is your single most powerful piece of evidence. So, let's pull all of this together. Let's make a simple step-by-step plan so you can lend money the smart way and sidestep all of these problems we've been talking about. Okay, here it is, your 5-step action plan. Step 1, be really honest. Is this a loan or is it a gift? Just decide. Step 2, get it in writing. Create that loan agreement. Step 3, don't use cash. Ever. Use a bank transfer so there's an electronic paper trail. Step 4, keep track of the repayments. A simple spreadsheet is perfect. And finally, step 5, if you're earning interest, don't forget you have to report it on your tax return. Simple as that.
So we come back to this idea, is all this formal paperwork, is it actually a kind thing to do? And I think the answer is a massive yes. It's not about being cold or formal with your family, it's about protecting them. It's protecting your kind gesture from being misunderstood by the tax man, and it's protecting your loved ones from a massive tax bill later on. Honestly, it's one of the kindest things you can do.
Now look, we've covered a lot of ground, but every family is different, right? Your financial situation is unique. And because the rules can get a little tricky and the amounts of money can be really high, getting advice that's tailored just for you is always the best move.
So if you're thinking about lending money, or maybe you've already done it and you're a bit worried, the team at My Tax Accountant is there to help guide you. For professional help that's specific to you and your family, you can get in touch with them on WhatsApp or by phone at 07854 255 375. Or just drop them an email at info@mytaxaccountant.co.uk. Thanks so much for listening.